We've seen annuities that will have double income if you cannot perform two of your activities of daily living. Some of these have about a 5 year holding period where you can tap into that, where you wouldn't be able to do that until 5 years.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, president and founder of TJ Stearns Inc., your resource, ladies and gentlemen, for a common sense approach for information, education, for knowledge about your money, your investment options, and how to plan effectively for your financial future, including a confident retirement and beyond. We are always privileged and enjoy the time that we get to join with Tim Stearns, CFP. Tim, welcome back into Protect and Grow.
Hey, Peter, thanks for having me. I'm excited about today, about talking about something that I think is kind of an 800-pound gorilla that a lot of people don't talk about in their houses, but they know it's out there.
Yeah, it's that quiet monster, right? Is that thing that can absolutely wreck and wreak havoc to even a well laid out financial and retirement plan. We're talking about the cost of care, your largest potential expense in retirement. The numbers are staggering. It's a scary proposition and consideration. There are reasonable solutions that we will talk about on today's program. So if this has been a concern, even lingering somewhere in the dark holes of the back of your mind, like, tune in for today's program. Give it some time and attention. Give it some thought, ladies and gentlemen, because if you have not really considered the potential impact of being unprepared for long-term care and considered the reasonable solutions that are available, then you're really missing a large part of building for lasting financial confidence, not just for yourself, but for your family. And Tim Stearns, always here talking about the important topics. So we talk about income planning, investments, taxes, legacy healthcare on a regular basis. And Tim, in your office, you bring all of those things together and help proactive savers and investors construct that written retirement blueprint, the Protect and Grow plan.
Well, we're running into a lot of people who are realizing that a lot of these other advisors out there are just money managers and they're not addressing things like, and we've talked about this taxes, Medicare, Social Security. But the one big one that I'm noticing that they're not addressing whatsoever is long-term care, the different options that are out there. And I noticed that, many baby boomers are afraid or skittish about doing anything long-term care because they've seen it with their parents where, premiums have gone up, or maybe they didn't even use it and they passed away. But there are a lot of options out there that we can get a bang for your buck, if you will. That someone in let's say the Smith family will end up with the money that you put into the policy.
Yeah. Well, I will spur to kind of another question and want to get down a rabbit hole with you on that one. Just a short diversion here, Tim. But before I do that, I want to remind you, ladies and gentlemen, that if you would like to construct your own Protect and Grow plan with a true advisor, a certified financial planning practitioner, professional, and an experienced, qualified team of professionals, pick up the phone and give TJ Stearns Inc. and Tim Stearns CFP a call. 800-640-2256, 800-640-2256, 800-640-2256. No cost, free of charge, all the way through the initial planning process from the phone call with an 800 number, 800-640-2256. Not that that's a big deal, I don't think, for folks much anymore. I'm not sure that we're getting charged even for local or long distance calls any longer. But Tim, the conversation with you, your years of experience, your team behind you, the initial review and strategy session, the analysis that you will put together, and then finally constructing that comprehensive Protect and Grow written retirement blueprint, all the way up and through that point. No cost, no obligation to listeners to this program. You do work with certain kinds of individuals, best those that have put themselves in reasonable kind of situation for expectations for financial confidence. But talk to us about constructing that plan, the process, the expense and the time investment involved.
Well, doing a Protect and Grow blueprint takes time, and we don't just use a software and it's cookie cutter and that type of thing. We actually get into the nitty gritty with people. What we want to try to figure out is what is coming into the house of their guaranteed income, what is going out of the house, via expenses, and then what minutia besides that is there that maybe that would make us make a different plan or a plan of attack to make sure that we're addressing everything in there. And part of that would be a long-term care option. Just talking to people about, you realize that 7 out of 10 Americans over the age of 60 will need it. 9 out of 10 of us have not addressed it. There are options out there that would give a bang for your buck, and we talk them through that.
Well, again, if you would like to get that protect and grow plan put together, ladies and gentlemen, pick up the phone, give a call. Tim Stearns, CFP, and his team there at TJ Stearns. Looking forward to hearing from you, answering questions as directly as they can on an initial conversation, and then bringing you in to have that one-on-one review, evaluation, a deep dive consultation, and strategy session in planning, and then the work behind the scenes, the mapping out of that written retirement blueprint, the protect and grow plan designed specifically for you, your situation, your goals. And again, to take advantage of that opportunity, no cost, no obligation, just start with a phone call, 800-640-2256, 800-640-2256. And Tim, I know you're wanting to get into the conversation about the long-term care, and I want to get there with you, but the rabbit hole that I wanted to go down here, you mentioned money managers, and you said what you do there is above and beyond what you are seeing from people coming in who are realizing they're dealing with just money managers. Can you talk a little bit about that distinction? Like, what is a money manager not doing? When and where is a money manager valuable? Like, where's that niche part of our plan and going to provide benefit? And then what are maybe they not addressing that are the clues that we need to move on to a higher level planner, if you would?
No problem. So we're seeing that people are, basically putting money in mutual funds and that type of thing, even do-it-yourselfers, and that's fine and all. But what they're not addressing out there is that how are they going to get guaranteed income? And that usually steps outside of the bailiwick of what people do at these different advisors that are out there that you see on TV and that type of thing. All they want to do is sell you mutual funds, stocks, bonds. That's not guaranteed. None of that is. In fact, very much the opposite of that. And so what we're telling people is, right now with interest rates being so high, such a great time to be buying, like, for example, an annuity that has a guarantee on it that you know that no matter rain or shine, what the market does, you're going to be okay. Am I telling people to put all their money into that? Of course not. But I am showing them that with the Protect and Grow blueprint, an annuity takes a lot of stress off of your portfolio. And with that comes happiness and peace of mind.
And then you talked about taxes and social security and
Mhm.
Medicare decisions and what we're going to talk about today, the healthcare protections, right? On this program, we aim to cover some of the important and critical protections that can be put in place to defend your financial stability against the extreme costs potentially associated with healthcare and specifically with long-term care. So Tim, let's kind of dive into that because you quoted some scary stats and statistics and numbers.
Yeah.
7 in 10 people, according to the Department of Health and Human Services, 7 in 10 of us are going to require some level of extended or long-term care, just above and beyond routine care, before the end of our lives. And yet, very, very few of us, even the proactive, uh, savers and investors and planners, very few of us have actually addressed this potentially catastrophic cost.
That's right. Most people are either not addressing it or they're going to quote unquote self-insure. Peter, you and I lost a dear friend a couple weeks ago who had a stroke, then had another stroke while also having a heart attack. And for 2 years, his wife took care of him.
Yep.
And you know what that did to her. You
Yep.
know what that did to their family, and you know what it did to their finances. And I know that for my wife and I, we never wanted to be in that. And so what we did is we bought a life insurance policy that we are paying premiums in that's going to be permanent. If we never use it for long-term care, it will pay my family a tax-free death benefit, which is nice. But in the event that I am one of those unlucky people that's one of the 7 out of 10, then they'll be able to pull down about 25% of the death benefit tax free, just like the old long-term care policies, and be able to take care of me. If I cannot do two of my activities of daily living, or if I'm cognitively impaired.
Yeah. And not to harp on our mutual friend's situation, but like he was in a situation, Tim, where he could probably confidently classify himself in a financial level of saying self-insured, right?
Yep.
But the damage that it did really had ripple impacts on his family. Yes, the cost of his personal care was able to be covered, but there's so many ancillary impacts there, lasting financial impacts on others. So let's get into it, Tim, because people know this. I think we want to ignore it. We want to bury our heads in the sand. We want to
Agreed.
say, we're Superman and it'll never happen to us, or we'll deal with it when that time comes, or in one way or another. But the reality is none of us are invincible. It could happen to any of us, and we all need to have a plan. So let's kind of back up and just define, Tim. There are criteria that classify for what is considered long-term care. What is that criteria?
The criteria that you would need is that if you cannot do two of your activities of daily living, which would be being able to feed yourself, continence, transference, getting dressed, those are just four of them. If you can't do two of those, then usually you need long-term care. Now that
And
could
let's be serious. If you can't do one of those, you probably are in a situation where you need some help and assistance, right, Tim?
Right. I mean, the other ones fall into place real fast, unfortunately. So what you're looking at is that if you can't do that, you're probably going to need extended care. Our friend, had someone living with them that they would allow to live rent free. I mean, and as you know, she's moving home to her parents. That's how bad things got for 2 years. So to that point, this long-term care that we're talking about, I mean, you have a 7 out of 10 chance of needing it. Put that in perspective. You have a 3 in 1,000th chance of your house burning down. And I don't know anyone in my world in the 31 years I've been in this industry that does not have home insurance. And that's 3 out of 1,000. So you look at the statistics, that's 7 out of 10. So what it means is that needing a caregiver, whether it's in the house or it's at a place, and the costs of these places it's insane how bad and expensive it is. And the lower cost ones are places that you wouldn't put anyone.
And then, Tim, regardless, there are basic costs of routine care, hospital care, and
Yep.
prescription drugs that
Yep.
are offered by Medicare.
Right.
But beyond kind of basic routine costs and maybe, a short hospital stay, the cost beyond that could be associated with long-term care are extensive and not covered by Medicare. That's why it's so important that we plan.
I just had a woman in here the other day who was talking about that, and she said, "Well, wouldn't Medicare cover me?" And I said, "No, it's not at all. That's not a thing." And then she also said, "Well, what about Medicaid?" And I told her that if you need Medicaid, things are very bad off. You can't have more than $2,000 worth of income per month and assets and all that good stuff. It's so that's really hard to qualify for, and those places again are not places that anyone would want to be. That being said, there are ways to fix this problem. I mentioned the life insurance policy that my wife and I did. The other one is we've seen annuities that will have double income if you cannot perform two of your activities of daily living. Some of these have about a 5 year holding period where you can tap into that, where you wouldn't be able to do that until 5 years. But that being said, if it's a double income, that can help stave off some of the things that are going to be happening to your finances in retirement.
So, Tim, you're setting up some amount of money to provide you with a baseline of healthy living lifetime income. So, you're providing for that financial well being while you're here and healthy
Yep.
through that annuity, accelerated,
Yeah.
long-term care chassis. What that part of it does is allows you to access even more of your money when you need it the most. Now, you could do that in any account, right? If you've got money in a bank account, in a brokerage account, in any other kind of account, if you needed more of it, you could start withdrawing it twice as fast. But the caveat and the differentiating factor here is that in any other kind of account, if you started pulling it out twice as fast, that's twice as quickly that it's going to go to zero. And then that's it. You're out of income, you're out of assets that's been exhausted and extinguished. Whereas with this annuity, I think the real beneficial factor is you never reach that point, that it will always at least guarantee you that baseline income.
That's correct. It's a lifetime payout regardless of your health. The other great thing about it, this annuity that we speak of, and there's many different annuities out there, they're not all created equal. But the great thing about that is that uh, you don't have to show insurability. And that's I
No medical
absolutely
underwriting.
no, none. No, you don't have to show any medic. You don't have to go, go for any tests or blood or anything like that. You just put your money into it, and then most of them have a waiting period, of at least 5 years. But at the end of the day, it behooves you to at least address some of that by getting a guaranteed income.
And Tim, you cannot already be residing in a nursing care or
That's
skilled care
correct.
facility, right? Like
Right.
this is not something that once you're already in that situation, then you go after the house has burned down, so to speak, you go and get the homeowners insurance and fire insurance. That's not the way that this works. You've got to set it up ahead of time. But again, covering expenses not covered by basic Medicare, Medicaid. Tim, you touched on it. That's essentially health care, welfare. It requires you to, at the base level, spend down to poverty and then allow the government to set your standard of care. So this is a way where you've got more control over that and you're protecting and leveraging assets. And I think even for those who meet that description and could realistically say I'm self-insured, could describe themselves in such a way, even for them, like, is being self-insured the best way to do it? It does that provide as much leverage and protection as possible versus the solutions, Tim, that you're talking about with the annuity and the healthcare benefits doubler or the life insurance with the accelerated linked benefit?
No, it does not. So that I mean that's you're gonna in the one you're gonna run out of money. The other one you can put the onus on the insurance company so that they have to come up with the money, not yourself. And I think that, makes sure that you're getting the bang for your buck, that if you never use it, your family will still get the money back that you put into these different policies.
So not use it or lose it. Like that's a big factor because I think that that was one of the reasons why so many people sort of ignored this, shied away from it, or just did not pursue a solution altogether.
Correct. And by the time they are thinking about it, like our friend did, it's too late. And so that's why I'm saying, you want to get ahead of it, at least explore it so you can say, no, this wasn't for us, or it was for us. Most cases, it's a lot more affordable than I think people realize. It also lends itself to cash value in some cases, but it's got the benefits. And then again, tax-free income, which is a huge bonus.
Tim, how much is the cost of care? Is there any finite amount, a final, a maximum, an absolute price that long-term care, the necessity for that care being provided, is going to cost someone?
Right. No, it's pretty much the sky's the limit, unfortunately. And I mean that in the worst way because I've seen, the average around here is at least $20,000 a month. If you really need care, but and it starts out around 10 grand a month. And it can really decimate what you had, whether you were going to use it for you and your spouse, or if you're going to leave it as a legacy. It will decimate what that plan had in store.
And Tim, in your preparation for the program, you sent me a link. There is an online calculator. It's from Genworth, which is
Yeah.
an insurance company that had offered long-term care. I think still does. There are very, very few of these companies that still offer that traditional long-term care, but they've got a cost estimator that basically you can enter your zip code, and then it gives you some estimation because the cost of care, while not 100% accurate, does get determined by the location, the level of care required. Many factors go into this, but the numbers are scary looking out into 5, 10, 15 years into the future. This is one of the expenses. Not only is it currently one of our highest potential expenses in retirement, but increasing significantly faster than even the regular inflation rate.
Oh, absolutely. The rates that I've seen in the last 5 years have gone up so much. They can't get workers at some of these places, so they're paying better and better, and then pay that, that the buck transfers to us that we have to pay more for our the services. And remember, you're never too young to look at this because our friend was only 56 years old when this happened,
Yeah.
right? So I always tell people take a look, and even if you're older, there's different ways to look at it as well.
So, Tim, several different options for the approach here, and we're going to have to move through them pretty quickly. But
Yep.
traditional long-term care insurance, which is exceedingly hard to qualify for.
Yep.
Underwriting is very detailed. Any kind of past history of medical event, very few companies are even offering it anymore. People didn't like it, and the insurance industry actually underpriced it. That's why they are now moving out of that product offering. So traditional long-term care insurance, option number one. The life insurance with living or linked or accelerated benefits, option number two. The annuity option with the healthcare doubler, self-insuring or becoming dependent, either on the government or our family. Those basically cover the spectrum of the potential solutions, right?
That's correct. I don't know of any other way to do that, but relying on family is not fair to them. The constant theme I hear in my office is, I don't want to be a burden on my family,
Right.
whether it's financially or having to take care of them.
Yeah,
And
and nobody wants parents to become a burden on them either. And Tim, a lot of times this is happening in people's own peak earning years with the sandwich generation.
yeah,
The care of parents is taking them out of their own preparations for a secure financial future.
right. I have a friend right now who's shopping for places because his mom and dad need to go somewhere because it's absolutely wreaked havoc on his career. And he feels terrible, but they also but they're understanding of it that
Yeah.
it's too much for one person to do. So you got to figure it out. And they didn't save up for it, and they didn't address it. So it's coming down to the family having to help out financially with that one.
And Tim, so these middle options, I'll call them here, not doing nothing, not ignoring it, not planning to become a dependent, the linked benefits and the healthcare doublers. There are a lot of different chassis for this. There are a lot of different options, a lot of ways that you can build this into your plan. Can you go over a few of maybe those different options and things that people might not know are available that we should be talking about?
Peter, a really interesting way that you can do it, to address long-term care are these things that have linked benefits. For example, like life insurance that will pay out a death benefit, but it also has those components that we spoke of earlier that can help with long-term care. There's also, actually really easy policies that, they have knockout questions, we call them, that if you say, well, have you had cancer in the last 5 years or you have Parkinson's currently, it'll knock you out of the, but it's actually a really easy ask, a questionnaire that you have to answer. If you get all of them as a no, it's automatic underwriting. So, and that gives you the go ahead. Or there's also other ones out there that you can link with your spouse. So they're, double insuring. So that's another one that we've talked to people about. We're all about trying to find a bang for our buck for our clients. And these linked ones is where I see the bang for your buck because again, most baby boomers saw their parents either not get covered, disallowed coverage. I'll use that word, or they had it and it didn't pay out worth a darn. So people are very skittish about that are in the baby boomer years. So this is another way to address that.
Not use it or lose it. One way or another, you
No.
get a use of your money.
Yep.
Tim, you also mentioned in the prep that there were some that would cover for a finite number of years or a
Yep.
finite dollar amount. There are others that have continuation of benefits that essentially could last for life. You can structure how you pay for these
Yep.
according to
Flexibility.
flexibility there. Yeah, a single payment, payments for 5 years, up to 20
Yep.
years, all the way up to paying for life. Those instant decisions and approvals, those knockout questions, all of these things have really simplified the process of addressing a very complex issue. And for many proactive savers and investors, Tim, we've got some money somewhere that's maybe not doing a whole lot for us. And if we really examine, well, what is the purpose of the money? What is this really for? We would say, just in case, right? Just in case, this is kind of our security money. These tools that are available can help not only give that money more defined purpose, but even leverage it for that purpose of just in case.
Right. And just in case is what insurance is all about, right? That if you need, and I'm talking about annuities, life insurance, all these different products that we've talked about today. These are the just in case products because the chances are 7 out of 10 people will need this over the age of 60. That's not just in case to me. That means that, the law averages say that you or your spouse will probably need this. And so this is definitely a way to address it that we would talk to our clients about. It's more than money management when you get into retirement. It's about addressing the full scope of your lifetime.
Well, there are, ladies and gentlemen, reasonable, practical, even attractive solutions to addressing the potentially catastrophic costs associated with long-term care. Those potential costs are significant. They are a major financial risk, not only to you, but to your family and your financial well-being. Far, far too many of us are underprepared, underprotected. As always, Tim Stearns here as a resource and does make one big offer on the program, one opportunity for you to get that plan put together. This is just part of the plan. The Protect and Grow Written Retirement Blueprint, that covers income, investments, taxes, healthcare, and legacy, and certainly healthcare, legacy, and investments all tied into the question of long-term care. There are practical solutions. You need to find out about them for your benefit, for your family's benefit, for your financial well-being, not only to yourself, but your immediate and extended family, potentially generationally. These can have lasting impacts. So get the plan in your hands for 2025 and all the years beyond to be as confident as financially possible. And that is the Protect and Grow Blueprint offered exclusively there at TJ Stearns Inc. through Tim Stearns CFP. He's your resource. Give a call. 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, an important conversation. As always, a good time talking through this important topic with you.
Thanks, Peter. Thanks for having me.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals or growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.